Hi everyone, welcome to this time's Scrolling Finance. I've been at home and chaired the traditional Chinese Spring Festival from January 26th to February 1st. In this video, I'll tell you what happened during the week before the New Year holiday and whether the funding condition was still tight like the week before. Because of the public vacation, I suspended the last week's Scrolling Finance video, but now I'm back, alright? So happy Chinese Spring Festival guys, and let's dive in this time's video. The economic data was expressed last week. The GDP growth rate of 2024 quarter 4 was 5.4% year-on-year, and the total 2024 GDP growth was 5% year-on-year, which achieved the economic growth target of around 5% statistically. That's a good thing, huh? Then let's analyze some detailed data. First, about consumption. The total retail sales of consumer goods was 3.7% year-on-year. So we can see that driven by the consumer goods trading programs, the consumer demand continued to improve. We can see that the policy was effective, at least in December. The industry added value was 6.2% year-on-year, better than previously 5.4% year-on-year, whereas fixed asset investment was 3.2% year-on-year, slightly lower than previous one, 3.3%. As I said before, investment in infrastructure and manufacturing still played an important role in economic recovery, and it played well according to the data. Furthermore, it will play even better as the large-scale equipment upgrades program is on its turn. Second, about the real estate data, construction investment in real estate department, floor space of constructions, building completed, new started buildings were all lower than before, but the floor space of commercial building sold was minus 12.9% year-on-year, which showed some warm sign of the second-hand housing market, better than previous one, minus 14.3%. In this part, the housing market still needs further stimulus to alleviate the burden of mortgages of householders. So overall, the key policy, large-scale equipment upgrades and consumer goods trade-in programs has been effective since the fourth quarter, and in 2025, according to the Politburo meeting, the government will highly take more positive and proactive fiscal policies like increasing the deficit rate and issuing more ultra-long-term special treasury bonds. But what I really want to know is how will the PBOC implement the moderately loose monetary policy? You know that I do the bond trading, right? Third, we come to the funding condition part, which loosed on Tuesday afternoon. But for now, the balance between keeping renminbi exchange rate and the losing funding condition becomes the hot point in the bond market. Before Tuesday, the financing price 3% for investment agencies to cover the Chinese New Year holiday is too high to be accepted. Bond investors have to make a tough decision based on financing price. Then on Wednesday, the PBOC resumed the 14 days reverse repurchase operation by the price 1.65%, which decreased 20 basis points compared to the last time in September, which highly easing the financing pressure of the long side in the bond market. There was a rumor on Wednesday afternoon said that the price of IMLF will decrease 10 basis points. This ignited the imagination of loose monetary policy again, but unfortunately, the funding conditions have kept increasing since then. I'm afraid that agency investors have to get through the almost 14 days Chinese Lunar New Year public holiday by almost 4% comprehensive financing cost. Oh my God. May God bless your interest income, guys. Another hard point comes from the another side of the Pacific Ocean. Trump finally made his promise to be the president of the United States. In his inauguration, he didn't mention the tariff policy against China, which gave the Chinese stock market a break and also turned the bond yields to increase. So the last week was the Chinese Spring Festival public vacation. I backed home and have a rest. Market situation of last work week were pretty sucks. The earlier you were on your vacation, the less money you lost. I wish you guys will have a good luck in 2025, and as always, if you want to know more interesting finance information about the Chinese bond market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.